Time now for a look at the day's business news, starting with a warning from the world's airlines. Cole Stangler is here from our business desk to tell us more. Cole.
That's right, Haxi. Carriers across the world taking a hit from the coronavirus. That's a message released from the International Air Transport Association. It says demand around the world will be falling for the first time in more than a decade. The group's director says 2020 will be, quote, a very tough year for airlines, with the brunt of the damage coming, of course, from Asia. Now, the IATA is projecting a 4.7% drop in world demand, as well as a nearly $30 billion hit in revenue. The vast majority of that linked to Asian markets, as you can see here. The group says those estimates are based on the global SARS epidemic of 2003. That saw demand fall for 6 months, followed by an especially quick recovery. We'll see if coronavirus follows suit. Let's take a look now at the day's trading action. A rough day for the major Asian indices to close out the week. The Nikkei down around 0.4%, as you can see right here. Losses also on the Hang Seng in Hong Kong, and also on the Kospi in Seoul. That's after South Korea reported dozens of new coronavirus cases. Investors also taking in those disappointing figures on global air travel. Some slight gains on the Shanghai Composite, on the other hand. Meanwhile, in the United States, one of the biggest banks on Wall Street is turning towards Main Street. Morgan Stanley is acquiring stock trading platform E-Trade. It's some $13 billion. It's the largest takeover for an American bank since the financial crisis. It allows Morgan Stanley to tap into a new source of revenue and is also part of a growing trend as big banks seek to reach new, relatively less affluent investors. The firms still need the green light from U.S. regulators, though many observers don't expect that to pose a problem. Next up to Brazil, where state oil giant Petrobras is basking in some record profits. The firm raked in some $10.2 billion in 2019, up more than 50% from the previous year. This month, it's battled a strike as tens of thousands of workers opposed layoffs, though that walkout is now on hold amid mediation. The company's CEO also said the company is ready to weather any storm caused by the coronavirus, even as oil prices have dropped and China's economy sputters.
China is a major importer of commodities and a major exporter of manufactured goods, and this will continue. So it will always be an important market for us, but at the same time, we cannot be dependent on a single market.
Meanwhile, Lebanon's financial crisis is facing a new cliff edge. The government is due to repay a $1.2 billion bond in early March, and there are fears it could default on that obligation. This as a team of IMF experts arrives to help find a way forward. Luke Schrago has the details.
Pulling in the experts, a team from the International Monetary Fund is in Lebanon to advise the financially stricken nation on its enduring economic crisis.
Hopefully we'll get results that relieve the country on all levels: monetary, social, economic and living conditions.
The nation's enduring its worst financial woes since the end of the civil war there in 1990. Its public debt has exploded in recent years after the government poured its reserves into propping up an overvalued currency pegged to the dollar since 1997. Corruption, mismanagement and overspending on dysfunctional infrastructure has also bled coffers almost dry. And with a $1.2 billion sovereign bond maturing in less than a month, Lebanon is teetering on a cliff edge. Protests worsened after informal currency controls went into place last October, limiting access to foreign currency and restricting transfers abroad. Now, as one World Bank official told France 24, there's little choice left but to push through long-delayed reforms.
The situation will keep deteriorating, and we may find ourselves in a few weeks, few months, in a place that would be extremely difficult to the Lebanese citizen who would be seeing his or her purchasing power, his or her life totally shattered.
For now, Beirut hasn't requested financial aid from the IMF and will decide soon whether and how to pay out on the bond or seek to restructure its debt.
And finally, a sterling worded note on climate change from one of the world's biggest banks. Economists at J.P. Morgan say human life as we know it could be threatened by climate change. Now, without action, there could be, quote, catastrophic outcomes. The note projects global warming to hit not just economic growth, but also health, life expectancy, while also potentially causing famine and mass migration. It also includes a call for a global carbon tax. Haxi, J.P. Morgan is coming under a lot of fire from activists not doing enough to fight climate change. But at any rate, looks like the researchers clearly taking the threat of climate change very, very seriously.
Ending on a not so light note there, Cole. Cole with the Business News, thank you very much.